For the last 20 years, I've used this same one pattern to make millions of dollars trading. And to prove to you that it still works today, I just made $210,000 trading the same pattern yet again on a coin called AVAX. In today's video, I'm gonna show you exactly how you can use this pattern in stocks and in crypto. So like, comment, subscribe, and let's get to it. All right, guys, let's get right into it. This pattern is something I call the revival pattern. Now, funny enough, I released a course in 2010 called the Forex 4, and that consisted of 4 different patterns that I found to consistently repeat themselves with a pretty high probability of success back when I traded stocks. Now, I traded stocks from 2005 upwards of 2018. I took a 2-year hiatus from trading when I moved to Asia and stopped trading, until I went all in on crypto in 2019 and quickly turned 20K into $1.7 million. And now that has just snowballed into the same original patterns that I used to trade in stocks for almost 2 decades to now making millions of dollars in trading, implementing them in a new market, which is crypto. Because crypto has so much more volatility, you can actually make way more money than I ever did in the US stock market. Starting with this trade right here, which was $210,000 on AVAX, using a simple pattern called the revival. Now, I just had my record trade $300,000 using a survival pattern on XRP. That video will be linked below. That just happened a month and a half ago. On top of that, we just shorted the market crash and made $237,000 overnight, just last night, okay? So there is a lot of different ways to make a shitload of money. But in today's video, we're gonna talk about the revival pattern. And in order to understand the revival pattern, we have to understand where that pattern is in the market cycle. Now, I work with 9 different cycles in the crypto framework, okay? And the revival pattern is basically the first beginning pattern after a long decline. Now, there has been a separation of patterns in what I call alignment between Bitcoin and altcoins. Obviously, if you've been trading Bitcoin or any altcoins over the last several years, you've noticed that altcoins have done nothing while Bitcoin and Ethereum are up near all-time highs. A lot of your favorite altcoins are down 60, 70, 80, 90% still. So they're in a little bit different phase of the market cycle. And when we look at what the current market cycle is right now for Bitcoin, Bitcoin just broke out of what we call a force pattern and actually just had the huge dump that we just saw in the market crash that just happened. So the bear market could be coming into a return right now because the signals are telling me that. That's why I shorted the market and made $237,000. But at the time, just a few weeks ago, a lot of altcoins were in what I call the revival phase, okay? So you do have to have alignment and make sure that Bitcoin still has upside potential, otherwise your altcoins are not. And in that time, Bitcoin was still breaking out of its force pattern while AVAX was just breaking out of its revival pattern. A revival pattern is essentially, Jiminy crickets, that was a loud lightning just above me. A revival pattern is essentially a bearish trend followed by a triangular breakout pattern, right? Simple as can be. There's nothing special about this. It's just identifying when it's forming and when does it come into fruition and how can you take advantage of that. So let's take a look at AVAX here. And what was the pattern? We can see the market just had that huge fucking biggest liquidation event in history, but leading into that, we had a huge meltdown and a revival form up, just an ascending triangle breakout after a huge decline, which led to a nice breakout into daily supply, which we locked in our profits before the big dump to the downside. All right, just closing this trade. Boom, 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 cha-ching, cashed in. Brief interruption from today's video. I wanna tell you about something that you need to understand. One is that about 90% of traders have accounts under $10,000. And that only means one thing, is that you're trying to turn that small amount of money into a large amount of money fast, trying to flip your account. Probably seen people talking about turning 100 into some crazy amount of dollar amount, which is just simply not realistic. It's not gonna happen for you. The probability is just way too low. Insert Hydra funding. This allows you to get access upwards of $200,000 in capital. Now, typically the standard model for challenges is you have to go through and take a 2-phase or 1-phase challenge. And this is extremely difficult. And yes, we still offer that, but we wanted to change the game. We are now officially the only prop firm out there offering instant funding for crypto. And with that, you can get access up to 100K in capital, which is the equivalent value to my new AP here. So this is an absolute game changer because we have over 100 crypto pairs to trade from, and for a limited time, for only 30 days, we're offering 50% off all instant funding and all challenge accounts on the entire website under 50K. That's crypto accounts, forex accounts, and futures accounts. So if you're interested in getting started with that, you can click the link below and use the promo code FOOS50 to get 50% off any account on the entire site. We also offer the brand new crypto instant funding account with over 100 crypto pairs. Anyways, get started now, FOOS50. Links will be below, but let's get back to the video. Now, if we look at the Quantum Cipher database, when I set this out back on August 21st, this was my first alert saying, hey guys, we are now down in daily demand, pre-breakout of a revival pattern. Profit target is going to be the next daily supply zone all the way up here. If we look at where AVAX went shortly after that, it did come down in that zone and then eventually ran up, broke out right into that daily supply before we locked in profits, $210,000, and then the market meltdown happened. Now, if we look at the alignment of why this was able to break out to the upside and see this momentum is because it also is in alignment with Bitcoin coming down into our dip buying zone, right? Bitcoin crashed right into this daily supply zone, which is what we were talking about in my internal mentorship group. Like, okay guys, if Bitcoin does get down to this level, we're gonna start buying up altcoins because they're also gonna be in alignment in their demand. And then we're likely gonna see a run up in Bitcoin, potentially back to ATH, where we can then lock in profits on our altcoins. Now, the problem was Bitcoin did go right up into this zone and then crash back down to the downside, okay? And that caused me to stop out of all my long positions, which was AVAX stopping out for profits because I was also locking in profits on the way up. And then I also got stopped out of a few other positions for break even, such as Beam here, right? Beam was looking like also a potential revival pattern. Long lead in, bearish trend, followed by an ascending triangle, potential breakout, pre-breakout. We were gonna wait for it to come back into demand to buy, of which we did, and then it had one last big spike up to the upside. As we can see here, this spike to the upside, I was like, all right, here we go, boys. Time to make some paper, let's go. And then it quickly reversed. I trailed my stop up to break even, stopped out of that for break even. So AVAX was one of the only ones that actually had a follow through, basically because it's a little bit more of a top 10 coin, while a lot of the other ones, like coins that are just no longer that relevant, like there used to be a hype about gaming and all this other bullshit. Nobody cares about a lot of that stuff anymore. It's really just about trading reliable coins that are in the top 10, and they still form up these patterns and have huge moves to the upside. So it's really just about identifying these patterns pre-breakout, getting into only buying at demand zones. You don't chase the breakout because a lot of times if you chase this breakout up here or here or here, you quickly got reversed on and potentially stopped out. So for me, whenever I'm buying into any of these coins pre-breakout, I'm waiting for demand zones to be bought into down here, okay? Just like I said here, I'm gonna wait for it to come down into demand. Looking at AVAX, we bought into demand down here. We didn't buy up right before it breaks out because many times you're gonna get spooked and faked out and then just get stopped out, right? We don't know which time it's gonna break out, but typically it's the second or third time the retest of that wall, that's when the actual breakout occurs. When you look at these walls, think of it like a brick wall and a hammer. Every time this gets tested, it's like you're hitting it again with a hammer and a huge jackhammer. All of a sudden there starts being cracks in that wall. And by the time you finally hit it enough times, that wall is so demoralized, so damaged that it finally breaks down, breaks through, and that's what triggers a short squeeze and a lot of momentum of new buyers coming in, and typically goes to whatever next supply level is before it either halts out and that's it, or it goes up in that supply level, flags, and then continues to go up. If you look at the previous run on AVAX, which was also a revival pattern, this one actually had legs. This was the actual Trump winning the election actual breakout, right? That was more of a revival pattern that actually had some legs to it, that actually had some follow through. This one was just one quick pump, and then Bitcoin dumped, and then came back down, and then everything dumped. There was no sustainable breakout, which is why it's so important to be locking in at least partial gains along the way up for every trade that you're in. I mean, if you think about it right now, and you look at the history of your trades, how many times have you been in profit? And how many times did that profit go to nothing and then into a loss, and then you potentially losing your account because you never locked in any gains along the way because those gains weren't enough for you. You wanted more, okay? That's not how trading works. Yes, going for big wins is great, and when you finally hit it, it feels good, but the amount of times that you give back so much potential profits by going for that one big life-changing win, you end up never making any money. Because if you go for the big win again and again and again, you're gonna miss all these other big opportunities that may be just something like this. That small move may be $210,000, okay? Where this big move back here, we made a shitload more on that move back there. But that was back then. And then it followed up by a fucking 80% drop in altcoins, okay? So crypto is fucking scary. Look at what just happened here. Now, I'm gonna have another video coming out about talking about how and why we just got short Bitcoin and took advantage of this crash. You can see here was me locking in the profit, $210,000 on AVAX. And you can also see me just saying, all right, holy shit, just banked $237,000 profit, shorting the market dump, okay? That was under the forex channel. If you go into the trade alerts, you can see here, we are getting short. Yes, we're still short gold. We're getting short gold, short Bitcoin, 2%, retesting the dump triggers. Next stop is daily demand, major bull trap at ATH here. Short deep, short Ethereum, 45.38. Why is this not loading my fucking internet? I do not know. We're shorting Bitcoin up here, daily supply at 124, 125, looking for it to come all the way back down to 114. Bitcoin shorted right up here, absolutely dumped all the way down to 100K. We locked in most of our profits down between these levels here. So this is just all, again, understanding this framework, understanding the market cycle. It has nothing to do with me guessing or using my opinion on anything. It's just, I simply look at, okay, what part of the market cycle are we in? And there's 9 different patterns that work for every specific market cycle that we're in. It's essentially just a trading system. And if you don't have a trading system, and if you're acting off of emotion and guesswork and opinion and feeling, that's where you get yourself into trouble, and that's when you start losing money in trading. With this, it gets rid of all the guesswork. You just follow the system. This is what part of the market cycle we're in. This is the pattern that works in that market cycle. I found that pattern that works in that cycle on this specific coin. Let's execute. And then from there, it's just understanding probabilities. Yes, there's gonna be winners. Yes, there's gonna be losers, but hopefully we can find bigger winners than our losers, and that results in an end profit for us, which we just saw, 210K profit here on AVAX. So anyways, guys, that's a wrap for today's video. If you want to go further into my mentorship and understand how I'm literally only trading about 1 day a week. I literally set these traps. Like you saw, I don't just chase things. I set, if we get into this level, into this demand zone, then I'll buy. It allows you to prepare for upcoming trades as opposed to chasing trades. Losing traders chase FOMO. Losing traders were just buying Bitcoin at ATH thinking we're going to the fucking moon. There was so much leverage and everything just unwound and everybody just lost literally fucking everything, okay? You have to let the market come to you. You cannot chase the market. If you wanna learn more about that, I have a free YouTube video linked below. It's basically the laziest way to trade in 2025 and 2026. So definitely check that out. And thanks for tuning in. Like, comment, subscribe. See you guys in the next one.